Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. I like making money too. I'm looking for the most undervalued assets that I can find in the world. And then I present them on this channel and we get to invest together if you guys like those investments, and you can ride up this commodity bull market with me on this channel. So again, I'm heavily invested in commodities just because that's the undervalued sectors. If you like this content, give me a thumbs up. I'm going to talk about asset allocation. I know a lot of financial people. Again, I'm not a financial, I can't give financial advice. This is just financial education. This is my viewpoint on what asset allocation is. This is not, I've never gone through, I'll say, training on asset allocation. These are just opinions and definitions on asset allocation. So we'll get into this presentation. This is asset allocation and what some people think about it. So asset allocation is an investment strategy that aims to balance risk and reward by apportioning a portfolio's assets according to an individual's goals, risk tolerance, and investment horizon. And when they mean by asset allocation, there's different asset classes that they allocate to. So when someone says, I invest given a certain asset allocation to each asset. The asset classes are equities, which are stocks, fixed income, which is bonds, cash and cash equivalents, real estate, commodities. There's futures contracts that you can get into, and other financial derivatives are examples of asset classes. So when someone says that they're doing a portfolio rebalance, they are rebalancing between different asset classes. And these are the asset classes that people typically invest in, and they balance between those. The ones that I have is I've got equities or stocks, I've got cash, I've got real estate, I've got commodities, and I also have precious metals, which may be separate from all of this as well. Those are the ones that I hold. I am not big in cash. I do have some, but I'm not big on it. I'm definitely not big on bonds, and I'm not big on other financial derivatives like options and whatever else there is. And when people talk about portfolio rebalancing, the rebalancing is the process of realigning the weightings of a portfolio of assets. Rebalancing involves periodically buying or selling assets in a portfolio to maintain an original or desired level of asset allocation or risk. For example, say an original target asset allocation was 50% stocks and 50% bonds. If the stocks performed well during the period, it could have increased the stock weighting of the portfolio to 70%. The investor may then decide to sell some stocks and buy bonds to get the portfolio back to the original target allocation of 50-50. So that's what rebalancing means. And this is my interpretation of why asset allocation works. When money flows from one sector to another, it draws money from one sector and deploys it to another. When you rebalance, you are taking money from the overvalued sector and investing more to the undervalued sector over time. And that's why it works, is you're constantly rebalancing the overvalued to undervalued sectors. You're taking money from the overvalued and putting it in the undervalued, which makes sense. This strategy keeps things in balance in order to maximize returns while minimizing risk. So what about identifying value? What if one could identify value and risk? Then you could know which sectors to invest in and why. And this is what this channel does. It helps everyone identify what the undervalued sectors are and what the overvalued sectors are. Ratios tell us the risk and reward balance without blindly allocating capital and blindly rebalancing. And I still think diversification is needed, and no one should go all in on one sector, but the ratios do tell us where the opportunities are and where the best risk-reward balance could be in the market. And then what you do is you invest in those undervalued areas, given history, and we wait for that to become overvalued, and then eventually rebalance or sell out of it into something that is undervalued at that other time, whatever it is at that time. So ratio investing, this is what the channel focuses on. It's taking two assets, comparing it to each other, and looking at history. So ratio investing is identifying value and overweighting sectors that have better risk-reward profiles. It is that simple. We are doing a form of asset allocation here. I reduce risk by diversifying in undervalued sectors through position sizing. That is extremely important to understand, that I am reducing risk by diversifying in undervalued sectors through position sizing. And my position sizes are oftentimes between 2 and 5% of the total portfolio, depending on the risk that that company has and depending on how much you understand about that company. So the conclusion here, this channel can help you identify value in the markets by looking at ratios. It can also identify expensive sectors using the same analysis. So we can identify undervalued and overvalued sectors. Portfolio allocation is important and can dramatically change the odds in your favor for outsized returns. Where I think most people have problems is they go all in on one sector. They say, I'm a precious metals guy, I identify as a precious metals guy, and I go all in on precious metals mining companies, let's say. The mining companies, historically, they do very well for short periods of time, and then they get beat up the rest of the time. So it's a very difficult sector to be a buy and hold investor for long periods of time. You really got to get your timing right. But when they're on, they are on. They do very well over very short periods of time. So if you catch the market conditions right, if you catch a good upward move, you can see some pretty ridiculous returns. So what I like to do, and remember, this is not financial advice. I can only tell you what I do. What I do is I find 4, 5, 6 different sectors that I really like. I look at the risk. I think royalty companies are a little less risky than mining companies because they have diversified income streams from many properties. From multiple companies or many companies. It could be even many companies. It could be 50 companies, 100 companies. So I see that as a diversified way with a bunch of different income streams. So if 1 or 2 of those income streams, something happens, they don't really get hurt that bad. And in an increasing price environment, they tend to do just as well as many of the miners. So I like that type of investment because of the business model, because it's diversified inherently with the income streams, and it will catch the production increase and the price increase. That's what I'm looking for. Doesn't mean that's what you're looking for. I also like diversifying amongst a bunch of different sectors, getting some diversified miners. Those miners are diversified in themselves with their incomes coming from multiple minerals. And then I put money into multiple sectors. The sectors what I think are the most undervalued at that time. Uranium's undervalued right now. That's the one I like quite a bit. I do like silver. I like oil. I like some of the base metals, copper, nickel, zinc. I mean, you can go amongst a whole bunch. And I try to get a little bit of the best companies in those sectors and put a little bit of money in all of them. Over time, this is going to smooth out the portfolio. Some sectors go just massively up. Other sectors are kind of in pullbacks. So it really steadies the portfolio. It steadies your emotions as an investor. And you don't get these, I mean, you're always going to have short-term pullbacks where the entire sector or portfolio gets hit, but it does steady out the returns quite a bit. And that's what I'm looking for. If you guys like this content, please give me a thumbs up. Let me know what you guys are having your portfolios. How are you allocating your assets? What does that look like? Leave it in the comment section. I'd love to see what you guys hold and what companies you guys are kind of diversified amongst. Thanks for listening. This is Finding Value.